Hey everybody, Smart Silver Stacker here. In today's video, I'm going to talk about silver price manipulation. I get a lot of comments on my videos about this topic, and I think it's an important one for anyone stacking silver. While I don't think it's some kind of grand conspiracy, there is actually plenty of evidence that price manipulation does occur in the precious metal space, and we'll be covering some of that in just a few minutes. And to the extent that the price of silver is manipulated, I'm going to tell you why this is a factor that actually makes me want to stack more physical metal. So let's get to it. First of all, I do want to say a big thank you for tuning into my video. If you guys enjoy this video and you get some value out of it, please do give it a big thumbs up down below. That helps a lot with the YouTube algorithm. And if you want to see more videos about gold and silver, why not subscribe to the channel? Alright, so silver price manipulation. I get a ton of comments about this subject, and I've got to say, a lot of you get it. Like Gene Cook, who recently wrote, "Gold and silver are hard assets, and they are the only assets that have not been pumped to the moon. In an overvalued market, you want to be in an undervalued and unloved asset." And Gene, I couldn't agree more. But I also get a lot of comments like this one from Noyo, who says, "The metals are manipulated, and the price will never be allowed to rise. You are wasting your time with metals. If the silver price ever gets over $35, I will sell all of my metals. Meanwhile, it loses purchasing power by the day." And like I said, I get a lot of comments like that one. So I wanted to make this video to address the issue of market manipulation and explain why, in my view, it's not a reason not to invest. Rather, manipulation will ultimately be incredibly bullish for silver, and to the extent that the silver price is being held down now, it's really a huge opportunity for stackers and investors. And I'm not a financial advisor, this is not financial advice, I'm just a guy on YouTube, so take this video for what it's worth and always remember to do your own due diligence. So how do we even know that manipulation of the precious metals markets is real? Well, it's not exactly a secret. A quick Google search will reveal headlines such as this one from September of 2020. JP Morgan to pay $920 million for manipulating precious metals in treasury market. To get an idea of what JP Morgan was up to here, here's a bit from that article. Between 2008 and 2016, JP Morgan engaged in a pattern of manipulation in the precious metals futures and U.S. Treasury futures market, the CFTC said. Traders would place orders on one side of the market which they never intended to execute, to create a false impression of buy or sell interest that would raise or depress prices, according to the settlement. And this is not exactly an isolated incident. Here's another headline from November of 2021. JP Morgan to pay $60 million to settle precious metals spoofing lawsuit. So you get the point. This is not some tinfoil hat conspiracy theory. We know this stuff goes on. The only question really is to what extent. And that can be kind of hard to know because the gold and silver markets are somewhat opaque and it's difficult to decipher legitimate trading activity from manipulation. The fact that precious metals spot prices are determined in paper futures markets where the volume of trading far exceeds the amount of underlying physical metal, and the vast majority of contracts are simply settled in fiat currency doesn't help. The real point I want to get across here is we do know for a fact that at least some amount of manipulation does occur and is likely ongoing. It's nothing new for big banks and banking interests to be involved in setting the price of precious metals. The London Gold Fix is the process by which 14 large banks collaborate to set the gold price every day. Currently, the LBMA gold price is set twice every business day at 10:30 a.m. and 3 p.m. London time in United States dollars. The current 14 participants in the fixing are the Bank of China, the Bank of Communications, Coins and Things, the Industrial and Commercial Bank of China, International FC Stone, Jane Street Global Trading, HSBC Bank USA, JP Morgan Chase, Koch Supply and Trading, Marex Financial, Morgan Stanley, Standard Chartered, the Bank of Nova Scotia, and the Toronto Dominion Bank. And this is a process that dates back to September of 1919, when the 5 principal gold bullion dealers and refiners of the day, N.M. Rothschild & Sons, Makata & Goldsmith, Pixley & Abel, Samuel Montague & Co., and Sharps Wilkins performed the first gold fixing, thus becoming the 5 founding members of the process. And it's not just gold, a similar process is performed to set the price of silver. If you want to know more about the history of gold fixing, check out the article I've linked down below in the description. One notable passage from this article describes the gold fixing process as follows. The lead participant will begin the fixing process by proposing a price near the current gold spot price. The participants then simulate the results of trading at that price. The simulations do not merely factor physical gold, but include gold trading contracts or paper gold, which are marginally backed and which therefore inflate market volumes and alter the supply-demand valuations formulas that would otherwise apply to the physical gold commodity. So again, it's not outlandish to suggest that certain actors are rigging the price of gold and silver, and it really wouldn't be an issue for market makers to be involved in publishing a price of the metal, except for the fact that paper futures markets allow the use of paper contracts backed by fiat currency to affect the results, which opens up the door for all types of illicit behavior. So here's the situation. Banks that get caught manipulating the precious metals markets get fined a tiny fraction of their gains, and rarely does anybody face criminal charges over this sort of thing. Maybe the occasional desk trader gets thrown to the regulators as a sacrifice, but anyway, that's just how the system works. And it's silly to think that with a slap on the wrist being the consequences, that the metals prices aren't being manipulated. I'm not saying it's 100% manipulation. I believe market forces play a role as well. In fact, I believe that market forces play the predominant role in setting the price of precious metals. And that's why I believe that in the long run, downside price manipulation will be a good thing for stackers and investors who hold physical silver bullion. At the end of the day, market forces will win out over manipulation. And to the extent that the price of silver and gold have been manipulated to the downside, their prices will be going that much higher when the manipulation inevitably comes to an end. And here's why. It's simple economics. Let's take silver as an example. Silver is an industrial metal. It gets consumed regularly, it has steady demand, so silver needs to be coming out of the ground at a certain rate in order to prevent a shortage, along with an accompanying spike in the price. Well, why do miners pull silver out of the ground? To make a profit. And not all silver mines are the same. For example, let's say mine A has rich ore and easy accessibility, and it costs mine A $10 to produce an ounce of silver. And mine B has lower grade ore and is located deep in the jungle somewhere, so it costs mine B $30 to produce an ounce of silver. Well, if the price of silver gets manipulated downward and is held below $30, mine A can still go on mining, but the production from mine B is no longer profitable, so that miner might just close up shop, lowering overall silver production. If the price of silver is manipulated downward for an extended period of time, the available supply of silver is going to shrink. And if this goes on for long enough, it will create a real shortage of physical metal. And that's when the price will go up regardless of how many paper short contracts manipulators want to create. One dead giveaway that something like this is on the horizon is a disconnect between the paper spot price for silver, which is determined by paper contracts on a commodities exchange, and the price of real, physical, tangible bullion that you can hold in your hand. Kind of like the situation we find ourselves in now, where the spot price of silver is under $23, but a silver eagle is going to cost you more than $30. For the time being, everyone seems to be referring to this situation as one of rising premiums. I actually get a lot of comments about how dealers are so greedy these days and they're trying to rip us off with these high premiums. I don't think that's the case. I think we just happen to be in the early stages of a disconnect between the paper price of silver and the price of physical silver bullion. And this will become clearer as time goes by. When the spot price of silver hits $30, for example, and a 1-ounce round is going for $50 or $60, I think it's going to be hard to ignore the fact that this is no longer merely a situation of high premiums, but rather a complete disconnect of the physical market from the paper market in precious metals. I believe it's likely that this is the scenario we are headed to in the near future, and that's why stackers, investors who are buying real physical silver, shouldn't worry too much about price manipulation. If the price of silver is being manipulated downward, that means I want to buy now at a discount while the price is artificially low, because price suppression, especially of an extremely useful industrial metal like silver, just isn't sustainable. And the fact is that things that are not sustainable will not be sustained. Although sometimes they might go on a bit longer than you'd expect. So what do you think? Is silver being manipulated? To what extent? And does that make you fearful of stacking, or do you feel like it's an opportunity? Let me know in the comments below. And if you want to see more videos like this one about gold and silver, then check out these videos right here. Thanks for watching, everybody. Stay safe, happy stacking, and I'll catch you next time. Smart Silver Stacker, out.